Does it feel like your stock portfolio over the last couple of weeks has been continuously falling and the markets keep rallying, specifically in the NASDAQ? That's because that's exactly what is happening. This is by far the most manipulated market that you have seen in well over 20 years. A select few stocks are carrying a broad basket index higher, when really, it's only a couple names. That is because the market breadth is the worst that you have seen in over 20 years. And we'll talk about that, and what that ultimately means for the markets is stocks will come crashing down. This is almost certainly a fact. And obviously, I cannot say it's a fact because I am not a financial advisor. I cannot give you personalized financial advice. But every time this has happened in history, stocks have come crashing down. That's because if you take a few stocks out of the S&P 500, the S&P 500 would really be at like 360 right now. It would be trading towards the lows that you have seen throughout this whole entire cycle so far. Now, with that being said, we're going to get into everything that is happening here today in the markets, as well as with AMC Stock. So buckle up. This is going to be a good one. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So, like I said in the beginning of this video, does it just feel like your portfolio keeps falling and the markets keep going higher? Well, look at Microsoft. The largest weighting in the NASDAQ is at a new 52-week high today. This and a couple other names just keep going higher. Same story with Nvidia, same story with Apple, similar stories with Google and Amazon. Whereas about 95% of the stocks today in the markets are actually red. NASDAQ is up about 0.5%. Now, if you take a look at the actual trading view here, this is what you can see is the market breadth. It's this ADL. It's advanced decliner line. And this should be pretty similar to the S&P 500, right? When the S&P 500 goes higher, this line should go higher. When the markets fall, or this is for the NASDAQ, but same story. When the NASDAQ goes higher, both these lines should go higher. When it goes lower, both these lines should go lower. And that's what you've seen for a while, but not recently. Ever since about the end of April, you have seen a huge divergence. And even today, you're seeing most stocks falling and the NASDAQ is up 0.5%. You can see the NASDAQ is going higher and the line right here, this blue line, advanced decliner line, meaning most stocks are actually falling, you can see it's going lower. So what ultimately happens here? Well, this usually means a very big fall is coming in the markets. Usually what it means. In theory, you could see these big cap stocks start to lag out and start to stall and trade sideways, slightly down, and you could see the rest of the markets catch up. But that's not what we're likely to see this time around. We're seeing zero indications of any sectors doing well. So what does this ultimately mean for AMC and a collateral crisis? Well, it furthermore completes the theory that this collateral crisis is coming and stocks are going to fall. Now, it's hard to predict this. Is it going to be next week? Is it going to be 2 months from now? Hard to tell. Markets can stay irrational for a very, very long period of time. But nonetheless, this would boil down to the most manipulated market that you have ever been in. Forget what you thought you have seen over the last couple of years. This is the most manipulated market that you have seen in a very, very long time. So this ultimately comes crashing down for the shorts. And now how does that happen, one might say? Well, when you short a stock, you need collateral to back that, because you could get squeezed out of your positions. The stock could infinitely go higher, right? So when you pledge securities as collateral, you pledge something like an Apple or a Microsoft or a Nvidia or a Tesla for that matter, or a Facebook, or one of these stocks that continues to go higher. Well, it's all good when your collateral is doing well. It's all fine and dandy. But when it doesn't, when it starts to massively underperform and you start to get more requirements to put up more stock, that means potentially having to sell some of those big names, leading into this, I guess you call it, loop into itself, where those stocks fall, those big tech stocks fall, and Apple rises because more collateral is needed for those short positions. So ultimately, that is what is coming. Now, when does that come? I don't know. Keep in mind, I'm not a financial advisor. Could be wrong. But at least in my theory, it's getting more and more solidified the longer that we go. Collateral crisis is coming. Now, on a bit of good news with AMC stock, AMC Entertainment stock rating upgraded by stocknews.com. Says stocknews.com updated shares of AMC Entertainment with a sell rating in a report published on Friday morning. Now, you might say sell. Well, it's better than an underperform. And we were at an underperform rating. So now you're at a sell rating. Is this having any positive effect on AMC? Well, you guessed it. Absolutely not. AMC stock is down about 1.26% today, as well as the Russell 2000 down 0.75%, close to 1% as well. Not a big surprise. Russell keeps getting smacked in the face. It's those large companies that are pushing this market higher. If you're feeling pain in your portfolios, it's because the gains are only in a couple names, okay? Now, with AMC stock, I think if the markets start to fall from here, AMC stock will likely outperform. And you're even seeing that right now. Stocks are falling a little bit in the index level. AMC stock has went higher here, sitting at $5.08 per share. It's been a pretty straight, consistent line downward, or move downward, I should say, in AMC. I do expect a bounce here very shortly. I do expect the markets to actually fall very shortly here too. So that was your one bit of really good news here on the day. But that is basically it. You're getting this that's hitting the newswire. It says a Robinhood glitch showed customers' balances plunged to $0 or less just 2 weeks after it mistakenly listed AMC as bankrupted on the app. A Monday Robinhood glitch temporarily showed customer balances at 0 or less. Users posted screenshots on Twitter of incorrect balances, with some in the negative. The snafu comes 2 weeks after Robinhood mistakenly listed AMC as bankrupt. Yikes. Now, let's get into some of the short interest data with AMC stock. So a broad-based view, the short score is sitting at 89, $667.48 million worth of short positions in AMC stock. Estimated short interest of free float at about 25%. 32.37% free float is out on loan. Shares out on loan, 167.15 million. Days to cover at 5.15, cost to borrow at 128.57, and that is a trailing 3-month average. And you do have 100% share utilization as well. If we take a look at the live cost to borrow rates, Interactive Brokers has about 200,000 shares that are available to be lent out, with a cost to borrow rate of about 78%. Cost to borrow average over here, 107%. Cost to borrow max, 356.8%. And cost to borrow minimum sitting at about 0.5%. So the data over here is still looking very, very encouraging. Now, let's talk about what's happening here in the markets today. Home Depot had pretty rough earnings overall. Pretty tough. It says what Home Depot's poor outlook means for stock market and the economy. You guys can read that if you'd like to. Home Depot posts worst revenue miss in about 20 years and lowered their guidance, and that is what hit the stock earlier in the day today. Home builder sentiment pulls out of negative territory for the first time in nearly 1 year. At the same time, retail sales rose 0.4% in April, less than expected as consumers struggle with inflation. The advanced sales report for April showed an increase of 0.4% below the Dow Jones estimate for 0.8%. Excluding autos, sales increased 0.4% in line with expectations. Miscellaneous store retailers led gainers with a 2.4% increase, while online sales rose 1.2%, and the health and personal care retailers saw a 0.9% increase. It was the first positive reading since January and followed a 0.7% decline in March. So this is very recessionary data. It's not improving the way that people thought it would. And initially in pre-market, this sent the markets down. And then once you get the cash open, once you get the market makers going crazy, well, then you get the obvious run up in a lot of these, just a couple of these big tech stocks. And that's what really drives the index. So you got to take it at face value here. Russell 2000 down about 1.12%. That's more or less what the indexes would be down as well if you take out those large mega cap tech stocks. And the silver lining there is you will see those tech stocks fall, and that will create this collateral crisis almost with certainty. Now, throughout the remaining of the day today, you are going to get Fed Williams that speaks at 12:15 p.m., so just afternoon. Fed Logan speaks at 3:15 p.m. Fed Bostic speaks at 7 p.m., but then you also have updates from the debt ceiling negotiation that's going to come likely after the markets close. Their meeting starts at 3 p.m., and then you should get an update from there, depending on what they say. That could guide the markets here, but the markets, or I should say, the algorithms or the market makers, they really are not caring about this debt ceiling situation, right? They're still bidding up these few stocks here. But at the same time, under the surface, markets are actually crashing and burning as the debt ceiling deadline is getting closer and closer. So I personally think mega tech stocks are going to catch up. Let me know what you guys think down below in the comment section. Does your small and mid cap stocks, or your any other stocks really besides Apple, Microsoft, Google, Nvidia, Tesla, Amazon, all those names, does the small and mid cappers catch up, or do the big ones fall? I think that's the real question you should ask yourself, and that's the best way to try to, play this market right now, because one of those things is going to happen. You cannot have breadth this low. It's not breath, it's breadth. It's with a D in there, right? You can't have breadth this low for a extended period of time. It just doesn't happen, okay? So there you have that. Now, coming tomorrow, you're going to get some more Fed speakers and initial jobless claims, expecting that to tick back up again. But Friday, you're going to have Fed Chair Powell that will be speaking, as well as with former Fed Chair Bernanke. He was the Fed chair during 2008. So what you've gotten from Fed speakers so far is no rate cuts, maybe raise rates some more, staying data dependent. That's what you have heard. And that's not really where markets are pricing, right, for Fed policy. Markets are expecting massive rate cuts by the end of this year that are not looking likely. So take it for what it is. It looks like that collateral crisis is on the doorstep of these shorts and could really start to ramp up here anytime. So that is going to do it here in this video. If you want to take a brief look at the option activity, we can. I don't think it matters too much for this week, so we'll do that briefly before we do wrap up this video. About 35,000 calls in the money, 341,000 calls out the money, 222,000 puts in the money, and puts out the money at 302,000. Now, if AMC can get a bounce from here, that's going to be very good. You have a lot of puts in the money that will contribute to a lot of buying pressure. But again, this is the most manipulated market that we have been in a very, very long time. I'm not going to make any statements here to say the options are going to help. They could this week. They could help AMC, but you got to get through the manipulation first. You got to get through, a Microsoft hitting a 52-week high when a PayPal is down over 80% and hitting new 52-week lows almost every single day. Like, that divergence is insane, okay? Until that fixes itself, until you see something come into alignment, it's hard to try to say what AMC is going to do. We just don't have a clear picture yet. But that is it. That is all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.